Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's update our view on the euro currency, guys, again. So yesterday indeed it was really dramatic action, and as you understand it has been triggered by the unexpected statement from the European Central Bank. So in general, when we discussed in the previous couple of sessions performance of the euro currency, we said, well, in general, technical picture suggests that some downward action should start, and only some outstanding thing could lead market to break the resistance that we have. And so it happened so that, particularly at this moment, this unexpected thing has happened. So hopefully, and thankfully actually, as we discussed yesterday, it's possible performance, and we're waiting for some signs, particularly speaking for the Russian rinse and probable double repo pattern on the flow time frame chart. None of these patterns have been formed, so market just showing straightforward action immediately from the retracement right to the upper direction. So we take a look at this on the hourly chart a bit later. But if actually you have anticipated the possible pullback that we have discussed, unfortunately probably we got some loss above the 1355 area. So, but this is actually part of our game, so we can't be every time correct in the prediction of the price action. Actually, this is one of the reasons why personally I do not like to anticipate any action. I prefer to wait for clear patterns. If I do not have it, well, for me it's better to skip the trade and or wait a bit longer for more confirmation from the market. Anyway, speaking of this upper direction, what really has happened? So if you take a look at the statement of the central bank, we will see this phrase from the Christine Lagarde. So she's acknowledging that the mounting inflation risk and declining, to repeat previous guidance that interest rate increase this year was extremely unlikely. So European Central Bank said that they do not expect anymore the gradual declining of the in inflation this year, and they exclude the previous phrase that change of the rate is extremely unlikely. So that was really clear bullish signal to the markets, and that has led to really big action on the euro currency. So this is not actually because of this statement, but because of the rebalancing of the equilibrium that have been priced in the value of the dollar. So everybody already prepared that the European Central Bank will stand silent in 2022. Fed should rise rate 4 times, and maybe in some time it could even rise rates for the 0.5%. And that has made some pressure on other currencies. But currently, with this recent statement from the Lagarde, it seems that it's coming massive rebalancing, because the dollar index is trading in relation to mostly to the euro currency and the Great British Pound. In the Great British Pound, we already see the 0.5% rate change. Euro currency and the European Central Bank changed the rhetoric, which has lead some pressure on the dollar. And here, I suppose that it is, well, this action not as fundamental, but mostly, well, a big part of the emotions stands here. And I think that a bit later, market will turn to some common sense with the possible pullback, some retracement here from the action. And we need to see when dust settled a bit about the statement. It's great that we are coming to a weekend and investors will have the time to think about it, sleep with this idea through the weekend, and then come to some clear decision. Well, but this is really a very important moment. Here, actually, speaking on the overbought and technical situation, you could see that market stands at the level of the overbought that's typical for the most aggressive rallies in recent times. So if you take a look, here was outstanding rally in 2019, then once again in the same year a bit later, and right now the overbought stands at the same strong level. This is not the volatility breakout, but still this is really very strong upward action. So, and currently, whatever we have on the background from technical point of view, definitely not the points to consider taking long position. Besides, market, as you can see, coming to the major confidence resistance that based on the top. This is good signal, but currently we should be careful, not really be too inspiring with this recent rally, and keep common sense and wait for a clear reversal pattern. One of them, by the way, I suggest that this might be the hand shoulders. So this could be left shoulder ahead, rally here is very strong, and might be right shoulder. So definitely some pullback here should happen. It's just because take a look at the previous downside momentum. So besides, balance could, well, this initial inspiration could start fading if, for example, we get very good non-farm payrolls release, if especially inflation, wage inflation will be higher today, and later if suddenly, for example, Fed rise rate for 0.5% at once in March session. So this also might chill out a bit this rush that we have on euro currency. But currently, this is a very important argument for performance of the euro, and that is one of the patterns that I think we need to keep an eye on. So on the 4-hour time frame chart, it's nothing really interesting. Here we haven't got the double repo that we discussed recently. Besides, as you can see here, this type of the stop grabber action has happened. But this performance definitely doesn't correspond to our idea yesterday of the possible wash and rinse. So that's why for scalp traders, you probably could consider some possible bearish patterns once again on the intraday charts. Currently we do not have anything, but theoretically it might be formed because retracement, well, very high probability that it should happen. So these two levels that we could keep an eye on, maybe some brand bond trade may be formed, or maybe some other patterns might be formed. That will trigger the downward action. Most probable that retracement will be, well, either the 50% as usually happen on euro currencies around 113 area. It should be rather deep. Just we have this kind of the harmony here, or even lower to the 250. So to keep the pattern harmony, market need to show deep retracement. And in general, deep retracement here is logical because of the previous strong downside action. So that's the thing that we need to keep an eye on the intraday charts. On the hourly charts, take a look. Yes, indeed, this upward action has happened that we discussed, but it was straightforward. And it's totally erased our suggestion of the possible breakout and fast return. So actually we have those of you who are waiting for this type of action for the wash and rinse that we have discussed probably haven't taken the positions just because market hasn't formed any patterns in the performance that was suggested. So currently on hourly chart we do not see something special yet. Probably we need to see and wait what will happen because market just has reached a strong resistance and has no time yet to show the reaction. But in general, well, this performance that we see currently suggests at least a bit stronger upward pullback. Maybe it will not lead to the sharp reversal in euro currency, but it will depend on the longer term European Central Bank policy. And in the shorter term, definitely it leads to a bit deeper retracement, and not even exclude the chance that market could retest the yearly pivot around 1630 as a result of this performance in the medium term perspective, within a few weeks probably. So that's what we have currently on euro currency.